Coming up on Market to Market, farm labor gets caught up in political and policy scrutiny. A major metropolitan water treatment plant deals with high nitrate levels, and an extended commodity market analysis with Jeff French and Ross Baldwin next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next. Because a pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, June 20 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. Consumers have long been a big part of the U.S. economy, and this week's data gives new points for discussion. Retail sales veered off course in May by 0.9%. Shoppers taking their foot off the gas and buying autos led to the decline. The Federal Reserve held their key interest rate steady. Fed Chair Jerome Powell says increases in tariffs are likely to push up prices and weigh on economic activity, potentially making for persistent inflation. The Rural Main Street Index reported a major jump higher in May, crossing the growth neutral line for only the second time in 21 months. The survey of bank CEOs in rural areas covers 10 states heavily dependent on agriculture or energy. Some parts of the agriculture sector have strong labor needs. The issue of who's here and doing some jobs was at the center of policy debates on two different sides of Pennsylvania Avenue. The White House was asked to pause immigration and customs enforcement activity around packing plants, some farms, restaurants, and hotels. ICE agents have continued with deportation of undocumented workers. The issue also was the center of a Senate hearing involving leadership of the Department of Labor. Peter Tubbs reports.
This week, the Senate Committee on Health, Education, Labor, and Pensions held a hearing on the nominations for leadership positions in the Department of Labor and the Equal Employment Opportunity Commission. Andrea Lucas, acting chair of the EEOC, who has served the commission since 2020, defended the EEOC's actions on employers violating the use of H-1A and H-1B visas for foreign workers.
Can you walk me through some of the trends that you're seeing on that front in cases like those, and what motivates that discrimination?
Yeah, it can be found in almost every industry. How it plays out varies. I think that when you look at warehouse businesses, agricultural, manufacturing, it is often Hispanic preference, but sometimes it is another preference for foreign workers. Either way, it is often motivated either by racial bias, the assumption that a particular racial group that you're bringing in of an immigrant will be more motivated than the local white or black workforce. And sometimes it's motivated by economic arbitrage, the sense that you'll be able to pay them less because at any point you could deport them. We've seen everything from, again, Hispanic worker preference to importing workers from the Philippines that they can, on visas, that they can, at the moment's notice, get deported, revoke their visa, or move them all over the country. We also have seen it in the tech industry in particular with preference for H-1B visa workers at the expense of, again, local workers. So it can come up in both high skilled workforces as well as your frontline manufacturing jobs. It can also come up in terms of company towns where instead of employing hardworking Appalachian workers that are in your local communities, you are, again, importing foreign workers, decimating those towns and creating kind of a captive workforce again. It's a serious problem.
For Market to Market, I'm Peter Tubbs.
Water restrictions in central Iowa have been eased, but high levels of nitrates continue to be a concern to operators of the state's largest water plant. The Central Iowa Water Works has banned lawn watering for the last 2 weeks. At a tour of one of their treatment facilities Friday, leadership reiterated this is a water quality issue and not a quantity issue. Recent rainfall has added to river levels, but not done much to significantly dilute the makeup of the water. CIWW pulls from both the Raccoon and Des Moines rivers. All of the coalition's nitrate removal plants have been running for the last 60 days. According to utility officials, these are the highest nitrate levels seen following a drought.
We had some pretty dry times from 2020 through 2023, significant drought for 4 years in a row. We saw some higher nitrate concentrations last year, but then we had enough rain to kind of dilute. This year we're having sort of more normal spring precipitation, and we think, although there are many factors, those are some important ones that are leading to nearly record high concentrations in our rivers.
Next, the market-to-market report.
Higher rain has been problematic for wheat growers and welcomed more in corn country for the crop, but not the market. For the week, the nearby wheat contract gained 24 cents, and the July corn contract sold off 16 cents. Lower weather risk ahead for the soybean crop met the biofuel demand in the soy complex. The July soybean contract lost 2 cents, while July meal fell $7.80 per ton. July cotton contracted $1.29 per hundredweight. Over in the dairy parlor, July Class 3 milk futures declined 61 cents. The livestock market was mixed. August cattle dropped $2.62, August feeders cut $3.98, and the July lean hog contract added $3.30. In the currency markets, the U.S. dollar index put on 56 ticks. July crude oil moved higher by another $1.88 per barrel. COMEX gold fell $68.90 per ounce, and the Goldman Sachs Commodity Index expanded by more than 30 points to settle at 581.55. We are providing extended discussion on the markets this week with two of our regular market analysts. Joining us, Jeff French and Ross Baldwin.
Hey, Paul.
Good to see you guys.
Good to see you.
Great to be here.
If only there was something to talk about with you, Ross. So we'll start with Jeff, of course. Normally, I know how you feel about the wheat market. It is always that tough thing to discuss, except this week. Yeah. Rain in key areas, quality issues popping up, global situations. Question now is, Jeff, are we just getting started on a rally?
We'll have to see, but the week was the GMO trade. It was the get me out. And beginning this week, the funds were short 170,000 contracts. They were looking for lower prices. And then obviously with Israel attacking Iran, Russia coming out with one of their biggest wheat producing regions and proclaiming some drought problems, that sent the short sellers for the buyback. They wanted to out of their positions. So we've rallied 75 cents here off the lows. The charts look pretty good to go another maybe 20 or 30 cents before you run into resistance. But we do have harvest fast approaching. I mean, Kansas right now is probably 5% harvested. They've had problems with wet weather. But we should be about 30% harvested this week. But we are going into harvest. The wheat crop, I know we've had a lot of rain, but in general should be awfully good. So we took advantage of this rally. We tightened up on our old crop sales, and then we're looking to protect the downside here in the new crop.
Did you fully take advantage of it, or did you kind of hold thinking, we could rally more?
Oh, yeah. No, we did 20%. We got rid of the old crop, and then we started with 20% of the new crop, get some downside protection in place, because absolutely, I mean, it doesn't look like the Mideast conflict is going to end anytime soon. And then you still have the funds that are probably short 80 to 90,000 contracts.
So Chicago and Kansas City kind of leading the way. Is there any indication that Minneapolis gets to join the party? They've had their rally before.
Yeah, and, they're still months away from harvest. This rally has been led out of the Chicago market. That is where the most volume is, and that's what probably will continue to lead the way.
So, Ross, with the wheat, though, I mean, for being as low as it was kind of seen as maybe an option for feed alternative. Are you hearing anything of that coming back or now going away because of the rally?
You did hear about it a while ago, but yeah, you're hearing the opposite of it now. And I think a lot of while you're hearing about wheat not working its way into rations or working its way out of rations is frankly how cheap corn is. And you've got a lot of them big feed yards down in the south that had got aggressive on getting their new crop corn needs booked. And just with the price of corn and where it's at, I think that's the biggest factor right now.
Corn is usually what we talk about next, so let's keep going. But I do want to ask Gary's question, if we could, before we move any further. Gary in Wisconsin wanted to know, Jeff, most farmers are undersold a lot because of so much drought talk and lower prices. Is it time to get aggressive on sales and catch up, or is the drought still ahead?
Well, the drought is not ahead right now. I mean, we got, I know there's areas that are dry, but if you look in general of the country, here the third week of June, we're sitting in a pretty awfully good situation. I mean, we got a long summer ahead of us, but we'll see. This December corn market has been awfully quiet since the beginning of March. I mean, we've been in a 25 to 30 cent trading range. We can't get above 470 and we can't get below 435. So we're being patient right now. Obviously, we're going to have some positions on before the June 30th acreage report, but we got a lot of growing season ahead of us. 435 is the line in the sand for me. I think you got to get aggressive if we start closing below 435. But let's let the market, do what it does and see what it does. Right now, we've been awfully quiet in the corn market.
I guess, do people have any old crop? Are you pretty much having conversations about new crop right now?
Both. I mean, you'd be surprised. There's still a lot of cash corn still out in the countryside, and you would see that with the July contract. July options expired here today this week, and July board made a new low for the year. It's still above the contract low at 421, but we close at 428. I mean, that market since mid-April has been on just a one-way track lower. Mid-April, we were 497. Today, here, we're at 428. So it's been on one-way street lower.
What if you have a bunch of old crop left, Ross? What do you do?
I think the tricky part with the old crop is just the lack of story that the corn market has. Now, if you had livestock, you could definitely look at feeding it to that.
And do you get the sense, well, you could, and you're going to need some help. I guess let's get to cattle on feed if we could, because that was another big story that was developing today. Right before we went on feed 99%, placements 92%, marketed 90%. Which number stood out to you?
The placements number, for sure. The average trade guess was 94.9, I believe, and it came in at 92. So 2.5% to 3% below the average guess. That is going to be the number to watch and the number that should get all of the bullish attention. I don't think it's a complete surprise that the placements even came in below the average trade guess, because you had the full effect of the Mexico border being closed here when they just recently announced that. So that was all factored into this report. But as Jeff and I were talking about before the show started, with the pressure and the weakness that the cattle market's seen over the last 2 weeks, I mean, it's been some aggressive selling that we haven't seen for a while, and I think it's going to be worth watching on Monday to see how we perform. If we would see a sharp rally get sold on Monday in the face of this bullish cattle on feed report, I think it's a pretty telling sign of the things to come.
Well, we've been looking for it. I mean, it is a friendly number. Monday's close will be very telling, but here in the last week or two, we've seen the fundamentals kind of shift here. We've seen cutout start to move lower. I mean, cutout hasn't moved lower for 2 to 3 months. And then cash prices, they've been on absolute fire. Mm-hmm. Great fundamental bull market. Until this week, we've started to see cash prices lower. And seasonally, you get through Father's Day weekend, massively demand robust weekend, and then we work lower into the warmer months of the summer.
I thought July 4 was that holiday.
Well, I mean, it could be.
but that's the consumer side of this discussion. That I asked Ross back in March when we were in Lincoln. I said, at what point does the consumer step away? Has the consumer stepped away yet?
Up to this point, no, they have not. You've got the cutout. If you take out the spike of COVID, when we got boxes up to 410 briefly, but that was all COVID ramifications. You take that out, we are at all-time record high prices. And so far, we have not seen the consumer blink on beef demand much. And you start getting up to this threshold, though. up until today's sell-off, we got up to 394, almost 395 it was. So you start getting up to this 400 mark on the choice cutout, we're going to find out the resiliency of the consumer here moving forward. And it probably doesn't bode extremely well as we talk about seasonally. You start to see weakness. Beef demand peaks for the summer at this point. You start heading into the dog days of summer. And so at these high prices, at this point, it could start to be a little bit of a struggle to continue moving beef at the rate we have been.
And I'm not bearish by any means. I mean, the fundamentals are not changing, but the funds have just absorbed all this bullish information for so long. You know, where else can they go with it? So we may see some fund liquidation here in the next weeks to come.
Well, I was going to ask Ross, but since you bring it up, one of the theories on the Friday move lower was the funds exiting because of the Mideast. Now, do you buy that?
Potentially. I mean, if this conflict goes longer in the Mideast, that potentially is a negative to the stock market. And if the stock market breaks, the cattle will absolutely go through with it. But technically on Friday, we closed below the 20-day moving average for the third consecutive day. I think that's very telling. If we can get it back above that Monday, that would look extremely strong. But yeah, we closed below 210 in August. I mean, we're kind of teetering here.
And early this morning, we had recovered. We're trading well above the 20-day. So I agree with Jeff. The 20-day remains key to watch to get back up there. But early this morning, before we had this reversal, futures market looked like it was good. Hey, have we had enough of a short-term correction like we've seen several times recently? And they just hammered the market here today. So it's I think that's what makes Monday's trade really worth watching, because this has been they've aggressively sold these rallies here over the last 10 days. And you can hit a period where, as Jeff's saying, what's left to throw at this market or the funds that they haven't already traded?
Good point. I want to talk specifically to the one who feeds. And there's the thought that the cow-calf person is making the money right now, or has made the money. And then I've got the people commenting on stories that saying, why would we expand right now? Why would we put feeders? Why would we hold anything back? Why not stay at this number of animals out there? Is that going to happen? Is somebody going to actually say, I'm not going to expand, I'm just going to take this?
I don't think so, because we don't do that in production agriculture. Whether it's row crop farming or livestock, profits and extreme profits drive expansion. You go back to $7, $8 corn. What do? You go plant as much corn as you can. You clear every tree that you can possibly clear. Cattle, we're in the same boat. I feel like, while I think expansion, we are underway with expansion. And I think there's more expansion going on than what the market thinks. I don't think it takes time. I mean, you're 3 years out from that. Yeah. But I do think this year, over the last few months, we have started that expansion phase. My bias is it will get confirmed in, now this is a long time away, but the January of 26 inventory report. I think 25 is when we will bottom this herd in the U.S. You're still a ways down the road from the time that it really has an effect, but it just goes back to profit. I mean, right now, it's difficult to expand it, but when you're making these kind of profit levels that you are, especially the cow-calf guy, you want more calves to sell.
I think he's trying to book himself in January of 26 to say I was right. If you could, would you be putting up a soybean crush facility right now, or something to take advantage of last week's news?
Well, I think there's a story out there. Now, we have the public hearing that we take 60 or 90 days before it becomes law, so we'll see what happens there. But very friendly proposal. Absolutely. I mean, they're, especially with this year, low acres numbers, and we'll see that here next week. But there is something of an acreage battle that could be on the horizon very shortly.
I mean, Jeff, we'd had the conversation your 2 or 3 previous times. It was, why does anybody want to take advantage of soybeans right now? All of a sudden, if you took the opposite of what everybody said, you look smart, right?
Yeah, but still, I mean, if you look at the cash price on soybeans, I mean, we are still right at a break even. So it's not like we're making a ton of money on an acre of soybean right now. So we're still in that tough boat side right now.
But the question now becomes on November. Can I get to 11?
So 1075 was a big number. We haven't closed above that since October of last year. We got up to 1074, failed today. Outside down day today. We'd been up 5 days in a row, so it could have been, Friday profit taking. You get above 10.75, 11 is your next hurdle. But I think you're probably going to see, number one, you need probably a trade deal and then some weather thrown into the mix.
Do we need, not necessarily, you mentioned trade deal, but do we need a weather issue too in beans, or is that window shut?
Well, I think it would help. I mean, the funds are still short beans. I mean, obviously they bought back quite a few here this week, but that would absolutely help if we get a dryness period. And we're going into a very hot time right now, but it's June 20th, and it's only going to last, 4 or 5 days. A month from now, when corn is in pollination, I think the market will react a lot differently. But the market just did not react to this hot weather coming in right now.
Hot in early, but there's a lot of areas that picked up moisture. Which headline, how does an algorithm figure that out, or how do you sort what you humanly see to help advise people?
Well, I think actually the heat will be pretty good right now, and we got pretty good moisture in the ground. And going back to the old saying that rain makes grain.
Oh, we haven't heard that one in a while. It's supposed to be dry all the time. When I look at, hold on here, Ross, because if I look correctly, yeah, again, meal, another $7.80 down on the week. I think $3 last week. Why is meal falling, given what the other story is on the other side of the soybean market right now?
I mean, a lot of it, with the crush expansion that has occurred, I mean, there's no shortage of meal in the country, but then you coming off the big South American crop, and they had a massive bean crop down there, and it's just, there's plenty of meal in the world. And so there's not a meal story right now to speak of.
So no news means you usually fall.
I would say so, especially just right now with the supply of beans in the world. When you look at world ending stocks for beans, I mean, there's just no shortage of beans right now.
And one of our biggest clients in the world, China, has absolutely gone quiet on purchases of beans. May of 24, they imported 24 million metric tons. May of 25, they imported 8 million metric tons. So they have gone quiet on, and that's not just from us, that's from Brazil as well. So they have gone very quiet on the bean side.
And if we would rally towards that $11 mark, I don't think the phone gets picked up, does it?
Not unless a trade deal is made.
That forces the hand.
Correct.
All right, let's talk hogs a little more there, because that's the one bright spot this week. Why?
Hogs have had a really strong week. Actually, July hogs made new contract highs again this week. They've just been on a tear higher lately. And it's really, they've just got a favorable situation. I mean, consumer demand on pork has been strong. I wouldn't call it off the charts, but there's actually room here moving forward. You can see an increase in pork demand from the consumer. And so I think there's some optimism around increased demand. We do not have burdensome supply of hogs hitting the market. The cutout's been strong, and we haven't seen a lot of expansion. I mean, actually, it's very minor, the expansion that we've seen. So hog margins have been good, which they need it. I mean, the last year or so has been extremely tough for hogs, and I think hogs got a good story moving forward still.
Tight supplies, the cutout's $22 over this time last year. We're entering the BLT season, some of the most fantastic demand time of the year. The charts look good, funds are long. Now we are, we've rallied $25 here in the last 2 months, so we may take a breather here, but watch 108.50 in August. I think if we can stay above that, we can continue this rally.
Jeff, if you had to put a bow on this week's news, what's your biggest headline?
Well, I think it's the geopolitical right now and how the funds and the investment community will react to that. That's the one thing that we don't know what will happen here. We know what the weather's doing and if we're getting rain or not, and we can look out our backyard and see the crops. They look pretty good. But what the outside investment community does around the world, I think that's the biggest story here.
What do you see?
If I was to look at, I agree with Jeff. The geopolitical is probably one of the biggest headlines right now. I mean, it's pretty quiet otherwise. I mean, you look at the grain markets, it's really good. So there's not a lot of story for corn and beans there. If I step over to the cattle market and wanted to look at some of the biggest factors driving that, you had the USDA come out this week. They're announcing that they're ramping up production of sterile flies at a facility down in Texas. They've already announced down in Mexico. And as you move forward with that, I mean, they're looking to ramp up from 100 million sterile flies produced a week up to 160 to 200 million. And so I do think that creates some bearishness on the backside because they will get a handle, I think, on the screwworm advancing northward. And so it's something to keep an eye on for the feeder cattle market.
I have to write fly futures is what we'll cover. All right. Thank you very much, Ross. Good to see you.
Thanks, Paul.
Baldwin, Jeff French, thank you as well. Good to see you. And you have been watching the analysis segment. And in a moment, we will continue our discussion here with these two in our online-only segment. Search Market Plus with Jeff French and Ross Baldwin wherever you get your podcast to hear the conversation, or you can go to our website at markettomarket.org. The news of what's happening behind the scenes of this program, including our one last big event celebrating our 50th season, can be found in your email each Monday by subscribing to the Market Insider newsletter. Head to markettomarket.org. Familiar website there to subscribe now. Next week, we are going to look at the past failures in America's land promise. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.